Hello and welcome. You're watching Markets Today. I'm Sakshi Batra, and this is where we discuss everything about the stock market's opening action. Well, another week has started off on a sharp sell off note. We have seen the markets crashing very sharply right at the open. Talk about the Sensex that's given up over 1,300 points at open. The Nifty has slipped below the 15,900 mark as well. All across the board, you are seeing sharp sell off in the markets today. What's really caused this kind of a fall? Well, one, the record high US inflation data that we saw on Friday evening that led to the US markets closing lower. The US Dow Jones, S&P, and as well as Nasdaq, falling sharply after this record high inflation. The Asian markets, in turn, opening lower in trade today, and the SGX Nifty indicating a very sharp downtick. The Nifty right now has slipped below the 15,800 mark as well, down 2.5%, 418 points gone on the Nifty just in a jiffy within 15-20 minutes of opening trade today. Talk about the sectors. Well, every sector is deep in the red right now, down 3.5% as well. Nifty Bank down over 3% at 33,406. You can see a sharp 1,000 move on the downside for the Nifty Bank as well. The Realty Index is down 3.5%. Sharp cuts in the banking space, sharp cut in the metals pack as well, 2.8% down. IT index is down by 2.8%, FMCG down 1%, financial services down 3%, the auto index down 1.7%. So it's a sea of red. In specific stocks, out of the 50 stocks of the Nifty, 49 stocks are deep in the red. Only one stock is advancing. Cipla holding up at 0.7% uptake. On the downsides, Bajaj Finserv down 4.5% at 11,695. Talk about Hindalco down 4%, Tata Motors down 4%, Bajaj Finance, ICICI Bank. It's a deep down sea of red that you can actually see all across the board in the markets today. Of course, there is a fear that after the record US inflation, this could definitely lead to more aggressive monetary tightening by the US Fed, which could further push the US markets and the economy into recession. Recession fears are looming large right now. Whether this will entail into a huge, deep bear phase, and then the markets will actually witness recession as well. That's the kind of fear that the markets are trading right now at. Record low for the rupee as well, right as we open this trade. Rupee has slipped 36 paisa to a record low of 78.29 against the US dollar in the early trade. 2.5% downtick for the entire markets. The Sensex has reached the 53,000 mark as well, down at 52,970 at this point in time. Remember, this is almost closer to almost 9 to 10,000 odd points lower from the record high levels that we have seen, the peak of the Sensex that we have seen. That's the kind of downfall that we are talking about. Almost a 15% downtick from the peak for the markets, the Sensex and the Nifty at this point in time. Of course, as we move forward, experts do believe that this is a difficult time. Markets are for a tough period. Of course, so far we have seen the markets really bounce back from these kind of levels. But in case we do see some severe actions coming up, as what is expected from the central banks across the globe. And if the fears of recession really loom large, then there could be some more pain point for the markets. And the experts believe in the near term, in the short term, the traders and investors must brace themselves for some more downside in the markets going forward. Of course, as we move forward, there will be a whole host of focus on not just the macro data, because we will be also looking at the domestic inflation, domestic IIP data, and the domestic wholesale inflation and retail inflation data as well. All of that will be important to track. How much more will the domestic investors remain resilient? We have seen huge $22 billion worth of FII flow so far in the first 5 months of 2022. But despite that, the domestic investors through mutual funds, through SIPs, retail investors have put their focus in the markets. Will they continue to be resilient? Will they buy this dip? Is something we will have to continue to keep an eye out on to see how the markets really move forward from here. All of those important factors will be important to track throughout the day today. Let's talk about some of the other specific stocks and sectors that you should keep an eye out on. Morgan Stanley has kept an overweight rating on Sun Pharmaceuticals. Keep that stock in mind. Only Cipla right now is in the green as we speak. Talk about the experts. What do they say? Ajit Mishra believes expect the Nifty to find support somewhere near 15,650 to 15,900. If this support is broken, there could be some more sell-off. So keep that stock in mind as well. Apart from this, if you see some specifics, PSU Bank Index is down 3%. It's dragged by Bank of Baroda, Canara Bank, SBI Realty Index has shed 3%, dragged by Godrej Properties, Shobha Realty, and Oberoi Realty at this point in time. Talk about the kind of move that we are seeing on ICICI Direct has actually already indicated that the markets may be further feeling some more pressure. FPIs have pulled out 14,000 crore rupees in the Indian equities in June alone on the domestic, global and domestic equity concerns as well. So those are the kind of negative commentary that we are coming. Just look at this important stock as well. LIC, it's now trading below the 700 mark as well. So remember, the anchor book has opened today. It ended on Friday for the anchor investors, and looks like that they have pulled out some more money yeah, as the book has now opened, and their money is right now in open. 688 for the Life Insurance Corporation of India, down 21 rupees, 3.04% down at this point in time. Remember, the previous close was 709. We have seen a sharp downtick in today's trading session. The low of the day so far was 682 rupees. So LIC investors continue to see severe pressure on the downside for this stock as well. Now, as we move forward from here, I'll keep you updated with how the markets are progressing. Also, do stay tuned on to Business Today TV, as we will be doing some interactions with top experts to understand what should investors really do at this point in time amid the current crash to protect their portfolios right here. So do stay tuned. I'll keep updating you with everything that's buzzing on the D Street. Thanks very much for joining us on this update.